Yes, guys, I was wrong. I believe I have found here multiple charts and fractals that are pointing to a really specific area that Bitcoin is going to go over the next couple of weeks that we definitely should have an eye on. And that invalidates some of the things that I have said in my past video. And of course, we're also going to talk about the short-term outlook and the potential new trade setup. If you think that is interesting, stick around here. Make sure that you are subscribed to the channel, like this video, and also activate the bell so that you will never miss out one of these really important updates. And now let's get right into it. So let me start off with the 4-hourly chart and the obvious here, which is still this rising wedge that we broke down from. And we saw here after a short-lived consolidation, a move to the downside, which was basically a fake out because we came straight back up. And this is telling me that down there is also a support level right now. Then we can see that this is right now a significant support level because every time when we got close to it, either we got a fake out to the downside or we actually got a bounce from there back to the upside every single time. And this time was no different. The only difference was we had a candle close at exactly that level, but then the next candle shooting straight back up from the $41,770 level. We are back above $42,300, which is really important, and I'm gonna show you why that level has so much significance for us in a moment. So definitely stick around here. As long as we are holding here above $42,300, I expect Bitcoin to go higher over the next coming days. This rising wedge pattern will be invalidated only if the price action would come back and break back into the rising wedge and continues to trade higher, which is not something that we haven't seen in the past bull runs happening over and over again, where we got rising wedges, the price action broke to the upside and continued to rally. So that is definitely still here in the cards. If we lose $41,700, the rising wedge pattern will completely play out to its full extent and drag us down to potentially $37,800, $38,500, kind of in that price range. I expect Bitcoin to move then, but for now it doesn't look like it. And I'm going to show you now why I believe that the chance that we go under $40,000 is really, really, really low. For this, I want to show you first the BLX chart, so the Brave New Coin Index for Bitcoin, and want to show you some past cycles here. So when we have a look here, the bull run of 2013, then we see that once we came back down, the 0.618 level became the resistance. So of course we only knew that after we had the bear market low, but we see the reason why we got rejected from this level then. Here around, what is this, $800 approximately, where we got here rejected to the downside. And then for the whole period of the bull market, we never, bear market, we never retested that level until here in June 2016. And that was around the halving. So the next month was the halving. We got a halving rally. Then we got the halving, so we got a halving sell-off, a post-halving sell-off, and then we started to run back to the upside and actually broke above the 0.618 level. Once we broke it, we went into a massive bull run, and this has repeated then in the bull run of 2017 here once again. Again, we created a new all-time high. We broke under the 0.618. For the whole bear market, we stayed beneath it. We tried once here to break it in 2019, but got rejected. Then went into a downwards period. There was also, of course, then COVID. We had here our COVID dump. Otherwise, we would have pushed higher before. And after the COVID dump, we got then our rally to the upside, broke again the 0.618 and continued to rally higher into, again, a new all-time high. So now, in the last all-time high, the most recent one, we saw the same thing what happened here in 2013 to 2017 in that time period happening all over again. Because look at the similarities. We got an all-time high. After the all-time high, we broke under the now 0.618 level here on the monthly chart, retested it on the way down multiple times and got rejected. And now we retested it with the ETF approval for the first time since here, April 2022. The only question is right now, will we see here a further decline before we get a move back up? Or are we now breaking through this and go higher and get from a level up here somewhere a rejection and do something like this? I believe it's the latter, guys, and I'm gonna show you now why I believe that is. One reason why I believe that we first go higher is that we have an imbalance here in this candle from the last all-time high that got never filled, and we're really close to it right now, which would make a lot of sense to me to fill this first before we go lower. I show you after this a pattern that is in alignment with that target and why we should get this target. I don't want to say it now too much, but there is a reason why I believe that we could go as high as $60,000 before we see a major correction to the downside. Here also really important to know, we got a harsh rejection to the downside in this monthly candle of January because we have retested here a price level not tested since last year, since 2 years ago in the summer of 2022. So I'm not surprised that we got rejected from it, because for almost 2 years we have not seen prices like that, and that leads always to a really big reaction once we are retesting a level like this. So it's not really surprising. The only question is, how long will we now consolidate before we get this next leg to the upside, and only afterwards get the move to the downside? Another reason why I believe that we go first up before we go down is that we are close to the halving, so we should get another pre-halving rally. Down here, I believe that Bitcoin will for a really long time, maybe never, come back into the price levels of $25,700 all the way down to like $18,300 approximately, because this level is basically our perma support right now. And in also previous runs, bull runs, there are certain price levels that we never came back to, and it looks like that this is right now this level down here that we will not see ever again. So if you were able to buy in that area, congratulations. Potentially you will never see it again. Now, the reason why I believe that we are not done yet with a move to the upside is that we have not seen a proper distribution on the weekly or the monthly time frame yet. When you look here at the prior all-time high, you see that we have here somewhat of a distribution pattern before we went lower. This has not happened here for now yet. And in a distribution, we always have a mark up, then we start the distribution, then we have the mark down. The mark down can bring us to potentially $32,000, because if I would draw here a line, you see 2 wicks to the upside, and we have here also multiple wicks to the downside. So it would make sense to retest $32,000 because we have there definitely price-wise some confluence sitting. And as you can see, we had down here our consolidation, exactly as we should have in a Wyckoff market cycle. Here our accumulation, then we had our move to the upside, then we got the markup. So, and there's one final leg missing, and this final leg could bring us into the $60,000 area, which would coincide with a pre-halving run that could start as early as potentially even this week already. So if Bitcoin would be able to reclaim $44,000, I'm pretty convinced that we would get a pre-halving rally starting from this week onwards. Then the other reason why I believe that we are going first up before we go lower is that we have a massive CME gap here that opened up over the weekend. And that is something that we can trade. And I'm going to show you in a moment how I'm going to trade this. So you see here, we closed on Friday at $33,400. And on basically on today, we open at $42,400. So basically $1,000 gap is here right now on the CME's futures chart. You guys, you know the drill. Rather sooner than later, something like this gets filled between a Monday and a Tuesday. If it's not going to be filled today, I'm pretty convinced that we're going to see it tomorrow being filled. And that still gives us enough time to position ourselves to take advantage of that trade. And I will give you full disclosure, I'm already in a trade since this weekend, around $43,000 on Bitcoin. So that's why I will not open a new position. I will let this play out because I believe that if we are going to fill that CME gap here to the upside, then we go at least all the way up to $44,340 to retest that level. And I will either take profits from there then and close it, depending on the reaction that we are getting. But if we are smashing through it, I will just let it run and adjust my stop loss accordingly. But I'm going to get in a second into how I'm going to play this trade. So be on the outlook for that specific trade here once it's happening. So, but I will not neglect that we have also CME gap down here from $39,000 to $40,000 that was not filled yet. I believe that will be filled after we have completed the distribution pattern. Only then I believe that we are going to get it. I can be wrong, but I'm pretty sure with everything that I see right now, with all the confluence, with everything lining up, that we are going first back up before we go down. Now, when we are going into the shorter time frames, you want to know where would be a good entry, right? For this specific trade. For this, let me go to a 1 hourly chart. You see here we have the Monday high from today. And a good indication to enter the trade would be if we close a 1 hourly candle above the Monday high. You see here is some hard consolidation going on. So bulls are gearing up for a move potentially to break this to the upside. And once we are breaking here above 42,000, let it be $800, and we get a 15-minute candle close, that is where you can open a trade to trade this to potentially $44,400. There is where I would enter this. So now, if you're, for sure you also want to have a stop loss, 44,300. My stop loss would be here slightly under the Monday mid. So that is a 1.44% stop loss. If I trade here with 20x, potentially you can make 71% to the upside. And if you get stopped out, you would have a loss of 29% approximately. So, but still, it's almost a 2.5 to 1 reward to risk. And that's still worth it to me. On Bitcoin, you don't get all the time high risk to reward ratios. So if it's above 2.1, I'm usually taking the trade on Bitcoin. So that is one that I would be taking for myself. And guys, don't forget, if you want to take these trades with me together, do it on BYBIT. You still get $30,000 if you sign up with my specific link here. And also, you can copy trade me on CoinW without any KYC, without a VPN. Just go there, sign up, find my profile, AMCrypto. There you can copy trade me. And if you want the highest bonus in the industry, then go to FAIRDESK. There also you can copy trade me. I have copy trades there already running, also only with that specific link here, guys. Another reason why I believe that we potentially first go higher before we go lower is that the structure for Bitcoin is still intact. Nothing has changed here. We are still creating higher lows and higher highs on the macro daily structure. And as long as this structure is not broken, there is no reason to be bearish for me and to say that we go now to $32,000, $36,000, $37,000. So once the structure is lost, there we can start talking about these kind of targets. But as long as we are holding the structure, there's no reason for that. When we are going then into the Bitcoin dominance, we got at least a small green candle after here this massive drop to the downside. So what, again, best case scenario, what I would like to see here is some green candles just consolidating, not really pushing here higher, just consolidating, and then we go lower. So I want to see here a healthy mix of red and green, and not just here a lot of red, a lot of green, a lot of red, then one green, and maybe again a lot of red. that is not really healthy for altcoins overall, because they go up really fast, but they also gonna crash really fast again when this is happening, and that's not what we want to see. We want a sustainable grind to the upside rather than a quick lift with a quick rock on our hip back to the ground. So that's not what I want to see here. But for now we are under 51%. That is a good sign. Like I said, I would like to see some consolidation before we go lower to 50 and even below 50. And remember, down here is my first take profit point on my longer term altcoin positions of 49 to 48% in that area. Planning on to take some profits or at least to adjust my stop loss on multiple trades accordingly to be heavily in profit. So if it turns around and prices are declining, I will get kicked out with my profits and I will be happy. The total market cap is still super bullish to me, even though we have we got a rejection from the $1.8 trillion level. But again, that was something that I was expecting, because also here this level was not touched since May 2022. Harsh rejection is not surprising to me in that case. But I believe if we come back up here, the same with Bitcoin, we are smashing through it and continue to trend to the upside, which will then of course reflect in altcoins going absolutely ballistic. I want to touch really quick here on Ethereum. Here you basically see what's going to happen with Bitcoin, because Ethereum is right now leading again, and Ethereum is trading above its Monday high, which is important to continue to rally to the upside. Ethereum has already reclaimed it. We are waiting for Bitcoin to do the same. And once Bitcoin has done it, we are also going to see Bitcoin to move here into higher levels. Now for Ethereum, I'm watching this downward sloping trend line. I want to see this broken. Once this trend line is broken, maybe I can even adjust it something like this. Once we are breaking here above this downward sloping trend line, I expect Ethereum to rally. You see we got rejected from there for the time being, but also because at this level is the Monday high sitting for the time being. The EMA ribbon is also about to flip here back to the upside, which is a good sign out of this short-lived downtrend. If Ethereum can manage to do that, here the golden ratio will be really easy to be reclaimed, and I could imagine that we see another attempt to run here into the 2.618 of $2,878 over the next potentially 72 to 96 hours. Here on this Ethereum chart, you see basically the same thing on the daily chart. So we could potentially get a nice retest of $2,600 potentially by tomorrow. If that level is broken, 2,840 would be on the daily chart the next logical target. And remember here on the VPVR on the daily chart, also the $2,600 level is holding a lot of confluence and is the last level to be taken before we can finally move in direction of 2,840 and potentially even $3,000 over the next coming weeks here, because we have the potential Ethereum spot ETF narrative going on. But besides that, Ethereum is also outperforming Bitcoin right now with that consolidation here under 0.05993 Bitcoin for one Ethereum. Once that level is broken, I expect Ethereum to rally even harder than it did right now, and to rally here into the 0.065, potentially even 0.07 Bitcoin for one Ethereum area. Guys, that's it already for today's episode. Let me know in the comments below if you think that my case for Bitcoin is the most likely scenario, or if you actually think that I'm wrong there. I would like to know what your opinion is. And don't forget, guys, smash up the like button, hit the subscribe button, hit the notification bell, and I'll see you then again tomorrow.